What's going on, YouTube? A little under the weather today. I got off my chemo bag for the first time today after my first cancer treatment. So I'm a little slow, a little under the weather. Videos are going to be far and few between as I work through this. But I do want to get into today's recap because it was an interesting one. So we identified a couple different algos and a couple different over-unders. None of these in which are brand new by any means. We had the daily and weekly Fibonacci points, and once we broke some of these price levels, we had an opportunity to retrace to some of our really big levels and targets, aka 417.27 is what we called today. For the bottom, that's the end-all be-all, and like I said, that was still a stretch to 60 points plus. So on the fuse, obviously 6 points on SPY, but ended up at about 6 points. So that's a pretty monster move here. Insane. So let's talk about how we got into that. So looking at the 5-day 5-minute here. And again, we have an interesting algo after hours. We've been seeing these over and over and over. And whenever we get underneath the body, right? And this one is really easy. We usually hit to the wick side of things, right? And a lot of the time you can do intraday Fibonacci's on these too. And people think we're crazy here, but these play out relatively well to that downside target. Here's that 1618 coming in, and I'll show you the confirmation of that algo right now and why that's important. So I fibbed out the top and bottom of this algo. Now you don't even need this one because we had our obvious over-unders here, 421.96. We called this for the over-under here because that was our 0% Fibonacci on our old daily. You can check all of our old videos. He's been on here forever. And the 100 in the teal right here on a weekly time frame. So we had two very big levels we were going to lose today for that short, and if we came underneath them, we were going to come down to 417.27. Okay, that's a goal level. And this is just a historic support resistance I'll go over in a minute. So if you fibbed out this right here, algorithm, right, top to bottom, little algo wick, you'd have a 100% break right here. Okay, so that's the bottom wick, right, of that, and you see price action above, hit resistance, fail, break. What did it do? What did it do after it failed and broke? We retrace, right? Because we always look for the retrace. Hit for resistance and down, and then hit target. Okay, so that was your confirmation point right here, where the 100 fib had broken out, right, or down rather, and then back tested and then continued lower. And that's what I told my team was going to happen today, especially in the 1 minute chart. So I said, wait for everything to catch back up moving average wise into the 1030 dump. That is a Euro Central close. So if you look at 1030 Central my time right here, roll that up. I said, watch for that short play here after 1030, after we pop back up into moving averages, okay? We had a controlled sell this morning. That means price action was stuck under the 10 SMA 1 minute and could not get over it, not even to a VWAP tag, but we did call this VWAP tag actually right here, but that was the start of the retrace. Now, we had this whole morning dump. We called this the falling knife, said, please don't catch this, all the way back down. Boom, boom, boom. What do you see here? Big pops right into that 10 o'clock AM and then into the 1030 roll we talked about, okay? So right here's that 10, here's that pop. This is the retrace to the 200, retrace to the 100 EMA in the green, so on and so forth. Now, once the 200 was clicked, it made lower high, lower low, lower high, lower low, lower high. So you had every opportunity in the world as all the oscillation was turned around for 1030. We called the exact time it was going to happen too, right here for the short, because that's the Euro code, and that's when algos usually let go of the price action. These algos can be confusing once you study them, especially with us. These will make sense, but these pattern playouts are all algo driven. So once we see this controlled sell turned into bounce, turned into moving average catch up, right, turned into the rock and roll down and bottom. Now 417.27 was my main target. Now that one is literally just a historic gold level. That's it. This is short and sweet on this one. So if we go back into the chart, I'll even make it cleaner here. But it's a historic mega level, okay? So we're going to take 417.27. We're going to go to a fresh chart so you can see it. Give or take a couple pennies, there's your level. So that level was our target for today. Now, remember, there's a couple different things that have to do with this target. We are looking for over-unders and association candles, okay? Whenever we make a gold level, that is the strongest level of over-under that we are interested in. So when we go back in time here, we should have a whole bunch of interactions here that make this level gold and make this level strong. So if you just really cut back here a little bit, we have some very interesting over-unders right off the weekly. Doji body, huge weeklies, right? Came back into a nice confirmation zone there for the long. We're going to come back to near term after the all-time high dump and look at the over-unders here. So mass support, again, followed by that base here, 3 weeks worth. Came back down after it caused a huge pop. Interaction again, could not hold. And again, perfect resistance. And again, perfect resistance. Down, all the way back up, got over, created a gap on this level. Now this is a weekly gap, okay? Gaps are number one for algorithms to watch. So on that weekly gap, we have a very, very, very strong candle pattern, okay? This candle pattern can also be used as Fibonacci historic. So this is how I teach these. All my class knows to go in the Teachable, check out how to use gaps, high range, dojis, and floaters on the daily and weekly charts, and you would have something like this for future reference. And lo and behold, it plays out to the penny, okay? So that gold level in this floater being a double gap, was closed on the bottom, but regardless, came back up. And once we entered this is one of our bullish theses, right? This is one of our older Fibonacci levels where we held this. 1618, 2618, 423.60, top. And what do we say to that? It walks itself back down, right? So let's take a peek at where we landed. Well, lo and behold, that's where. So once the Fibonacci hit, boom, lower high off the 2618, boom, lower high off the 1618, boom, down to the 100. It's easy as that. Look at our last video. I'll post it in the description on how to read these free Fibonacci levels here, because once they go up, they do come back down. But most importantly, where you draw them is key. So I know it looks really easy when I do it fast like that. It's because we're so asserted to this and we're so just used to this, and so on and so forth. That's it. But a lot of the oscillation here too played a really big part. If you go to the daily, you had a really easy double top here at that 50. We had a recross the MAC. We had a no gap fill, which you said could magnet lower, and so on and so forth. Now, into the last but not least, I want to cover the bearish indicators real fast here for this day, because I want you guys to pay attention to what's coming next. The dollar had a very, very, very big push here. I don't have to go over this one too much. We just had a really good force up on the dollar where it held yesterday's highs and continued. So very small dips and force up, force up, force up. When you see the sideways action just ramping like that, even against all odds on deviation, that's very strong push manipulation. So we're not getting any pullbacks to any good strength. We had the 666 backtest micro here, and then it just ran with the 200. Deviations did not matter. More sideways action, more force up. And of course, gold was the same way. Early on, we'll see that here. Gold had that really big force up and then that drop which popped the market, then it just slammed back up and just went sideways, thus not dropping. Now, the biggest bear indicator key point of which we had today, which netted us a couple day trades, is the VIX gap, right? Now remember, I said if this first gap fills, that's our first short. So once it popped back up here and the VIX got essentially turned off right here, we had needed to come back. And this is how we caught our first little scalp bottom, where this first one, 1964-ish area right here, there was a gap on the 5 minute. So when the VIX came down and slammed into that, that was our first long of the market, catching that knife, and that lines up perfectly with the bounce. So if you take this down to the gap fill, you would be long the market, short the VIX here. That's right around 940. So again, if you go back to that market, we're going to go to 5 minute chart again. We're going to look right around that 940 for a potential bounce here. 935.40. So here again, this was that monster bounce we called right here, and that was moving up to moving average back test, and that was of course on the 1 minute where we seen the 200 come in, so on and so forth. We didn't get any from the 5 minute. So again, that's why we said use the 1 minute. Now let's go back to the VIX. The VIX gap is the most important thing I'll leave you guys with today. Okay, the VIX gap has a monster now gap at open. This is an unfilled gap. This will come back. Algos are watching this right here from the open to close, just like they were watching this one when we called the bounce. Now, this little area right here, I shouldn't say little, was already tagged once today, came back to the top of the tag, and that was your confirmation of the short, because there was not going to be a gap fill. Because usually the first gap tag, and I'll show you this on SPY right here, does not fill, usually. VIX is a different story, but this one played out relatively well. We'll go to the daily chart even. make it naked for fun. Oh, wrong one. Which one are we on? There we go. So whenever there's a gap right here, came back, no fill, fail. Gap right here, no came back. Gap right here, no fill. Okay, get the point? Comes up and does that a lot. So again, this had a double gap, but same similarity there. So the VIX came back down to that support, did not even attempt to go inside the gap right here, and then flew up. So that was your confirmation of what? Short the SPY, right? And this is going to line up directly with most likely that 1030 run. Yeah, right here. So right as this came back up, 50 crossed, 10 up, and then VIX just went nuts. Well, now what do we do with all this information, Brandon, right? What do we do? What do we know? What do we want to do with that? So now we want to see this come back down potentially. Now we have a huge day tomorrow, GDP, jobs, we have all sorts of stuff tomorrow. So we can get some volatility. This is the main key focus for me tomorrow coming into this. So if the VIX wants to come all the way back down, fill that gap, and the market wants to do a little scummy bounce, like a fresh low, break back up off data, that could just be a further bottom, because we are at a very historic support level, 417.27 here. And that is the level we called for our ending short target, this gold level. That's where we got. So if this, and we have another after hours algo, pay attention to that. These have been happening every day for like 10 days. We're going to watch the body there and high low. If this happens to hold right here and pop back up and give us another measurable long, maybe it's pre, maybe it's during the day, that is going to all be targeted. And how far that SPY long goes is how far the VIX has to fill that gap. I don't care what the correlation is or how far it is. The only thing that matters is if the gap is still on the way to being filled on the VIX, that is still a long bias momentum mover for SPY. Okay. I got some more earnings to digest and some other stuff here. But right now, I still think after my gold swing call, this still needs a pullback in my opinion. It could just, just go nuts, go ham, bonkers, straight up. But I still think it deserves a little bit of a pullback. So if we do sometime manage to get this to roll over just a little bit in the next coming days, I think a gold pullback will do well on a little bit of a temporary market bounce. I'm not saying there's a bottom or anything like that. This could sell off to the end of the year. I could care less. I would love a huge pullback into 2024. But right now, back to the end of the daily chart here, we are surrounded by seller volume. We're at the bottom of this RSI. We're coming through to watching the higher low max, okay? So we already have a cool coming back down on the RSI, looking for the higher low still here. MAC is looking for that recross higher low as well on the daily, and that can take some time. So that's all the key points that we had gone through today for the recap, why we picked the levels, fibs, and a little bit of the mini lesson. But now it's going to be 417.28 over under, and we have an astronomically large amount of support on a fresh low. Okay, so if we go into that 4-hour daily, whatever it happens to be, we have that fresh low territory here, just barely, not by much, but that's just barely that fresh low territory. Okay, so a lot of the times we come out of that, we can suffer for a little bit, but those fresh low territory reversals, they hold true. Here's another one right here on the 4-hour chart where the market loves to break into lows and then just temporary bounce. So if this was a low right here, fresh low, poof, bounce, low, fresh low, poof, bounce, low, fresh low, poof, bounce. You get the point. So that is a pattern that the market loves to tantalize shorts with. So now that we have a micro little fresh low, and even if the futures slip a little bit more, that's perfectly fine. But I don't think we're going to be, just straight down, bullet train down. But if we do, we obviously have the fibs for it. So over under is 417.28. What do we do with that? Well, if it breaks into that, we're going to head all the way back down to the next gap, right? 400 on, I think it's that far. Let's see how far that one is. The next one is... Oh, it's on my trading view. We got the cleaner trading view over here. Bam, 408. So that's the next one on deck. Now, remember, once we failed this, we also have our anchor points. I don't really want to post this one, but we'll post this one. Remember, once we fail our top anchor point right here, we go to our mid anchor point. And we just tagged that today as well. So that's another huge opportunity for potential bounce near here. Again, temporary. It could literally just do this until it wants to fill gaps and come back down. But we have a lot of gaps to fill, a lot of gaps to watch, under 400 as well, 408. And I would just love a big old fat correction into 2024 to buy that January, February, New Year dip. So that's it. So I hope you guys grasp that concept. If not, talk to me in the Discord and the chat. Want to trade with us? It's in the description. Check it out, and we'll catch you on the next.